All right. Okay. Just getting all my stuff open. How's it going, guys? I'm Erin with Straight Line. That handsome guy is my husband, Jake. See his face.
Good morning.
Happy Thursday. You guys are in the Northeast. I'm sorry. It's probably, I've heard it's been freezing. 70 degrees here, even though I have a sweatshirt on. 75 maybe.
It's been really cold.
Yeah.
There, last few days.
All right, well, we'll just hop right into this. I think people are still hopping on, but we will just get going. I'm gonna go ahead and share my screen. A little intro into it. We're Straight Line. We're both owners of Straight Line. We're an accounting firm. We were based out of Massachusetts. Now we're essentially virtual remote. We help small businesses and the owners on a proactive way to really help them run their businesses, proactive tax planning, and really what we've been really focusing on the past year and a half or so is going beyond that tax compliance work and just like bookkeeping and helping people grow their businesses, be more profitable, set goals, accomplish them, things like that. So that's really what Jake and I both love to do, what our passion is. It's what we've been doing with our business. So our webinars have been focusing a lot on this stuff, not just people always say, you're an accounting firm, just talk about taxes. Who wants to sit on a tax webinar? I don't know. I don't. So Jake does.
I don't actually, I really don't.
So we've been running a series of webinars. We had goals and other thing last in December. We have another one coming up in February about budgeting. It will really actually hone in on forecasting and budgeting even more. All these things tie together, and we're going to continue monthly webinars. They're all free. And for the foreseeable future, we plan on doing monthly and then switching eventually to biweekly or twice a month and then weekly. So if you ever have a topic you want to talk about or go over, we're happy to talk about it and present on it. We love technology, organization, processes, really anything. But right now we're focusing on helping people grow their business, be successful, profitable, and like intentional with it. So without further ado, let's get going. So we really, on this webinar, want to focus on how to measure and track the financial performance of your business, because until you have an understanding and a grasp on what your business is actually doing, the data, you can't really make good decisions and plan for the future. And as accountants, we obviously love data. Data is everything. Marketers love data, but really as a business owner, you should love data too. Data is really the key to the success of anything. It tells you so much about your business, the health of your business, and the track that it's about to go on. So let's go. In a minute. Here we go. So just housekeeping items. If you have any questions, feel free to just throw it in the Q&A section, not the chat. Hi, Donna. Good to see you. And we will also have the slides and this recorded webinar materials available. We'll be emailing to you by tomorrow. If you do have a question, you can raise your hand in the open forum section after this is over. We can unmute you and you can ask questions if you don't want to Q&A it. And then please check your spam or junk filters and be sure to just add @straightline to your safe senders. Our email domain's a little wonky and people always go in their spam. And also follow us. We do a lot of stuff on social media. So Jake's going to do a lot of this. He's actually going to show a demo of how to do some things and how we do forecasting. But really, why is forecasting important? If you were part of our webinar in December, goals were very important. They're very tied in together. But why is forecasting important? It gives you, the owner, the capability to make informed business decisions and develop data-driven results and strategies. That this helps eliminate potential failures or losses before they happen. So obviously, none of us could plan for COVID to happen, right? I don't think anybody saw that coming. But with that, I think we should learn from that and not repeat the same mistakes by forecasting and anticipating issues coming up, whether it's a recession, a pandemic, or whatever, even just maybe an illness, a pregnancy, what have you. You know, we have a lot of staff, like right now we have a staff that's going on maternity leave. That's technically part of our forecasting to plan around that. So we don't want to, not learn from history and not take what we learned for COVID and just do the same things over and over. That doesn't work. Clearly, a lot of businesses went under during this time period. So it's just super important to start forecasting, setting goals, and making plans for your business. And how do you do that? You collect and analyze the data from your business that you have on hand that you don't even realize, so that patterns can be found and predictions can be made. So 3 ways that forecasting can help your business. It can help you set goals and plan for the future. So forecasting, like I said, forecasting and goal setting are a little different, but they're definitely tied in together. So you can plan and bring some clarity and be intentional about your business goals. It helps you budget. So forecasting, like I said, for that maternity leave, we need to hire a staff to replace her. So that's part of it. So future expenses, things like that. And then, by the way, she's coming back. We don't like replace her. But and then help inform business decisions. So if you want to hire that new employee 6 months down the road, how is your cash flow going to be? If you need to purchase that truck or a piece of equipment for your job, things like that, you want to be able to, it really, really helps you make those decisions so that you're not just flying by the seat of your pants. Oh my God, I need a new truck. My one just died. Now what do I do?
Right. And to piggyback, obviously this is tax time. We're coming into that. And for us, we just finished tax planning season, which is one of the really 3 or 4 seasons that we have throughout the year. And it's amazing to see how little people pay attention to their actual financial data for their business. Just having a phone call with somebody and surprising them with a projected tax liability or tax due balance of 200 grand is not like a fun conversation to have on our end. It's probably the worst thing that we would be wanting to do, but it happens every year. We have several clients every single year. They're either transactional clients for us, and that all that is they're one and done. So they drop their stuff off during tax season. They pick up their whatever they dropped off. If they are dropping off paper documents, it's really not happening anymore, but and they're in and out. So we're just doing tax prep, and there's no planning involved. There's no reviews involved usually. And it leaves that client in a pretty crappy situation because they have no idea what their tax outcome is going to be for the year. So this leads into tax planning. And it's just, there's so much money that can be wasted if you're not paying attention to what's going on in your business. So that's why it's so important.
And I think that goes beyond obviously tax planning. That's just an example, but
yeah.
Businesses throw tens of thousands of dollars away unnecessarily every single year because they didn't plan in advance, they didn't forecast, they didn't come up with any expected things, they didn't save money. So it's not just tax, it's and the things that they can do with that data is unreal. The decisions that it's crazy. Data literally gives you power. I mean, what do you think's happening all day with your phones, like, and all that stuff? They're collecting data and then they're following you around when you talk about how you need a new swimsuit. All of a sudden you're getting swimsuit. That's all data that's being gathered. So just think of what you could do with the data that you have inside your business. It's exciting stuff, data is. I get really excited about it. So we just like to get some questions from you guys just to get the juices flowing, and just wanted to see like, how often do you do a deep dive on your financial statements just to measure how you're doing? So if you guys wouldn't mind just answering.
Yeah.
Just want to get you thinking.
There's no right or wrong with this. We've been running a survey for, it's been a couple months now. I think we've done about 20, 25 maybe. Mm-hmm. And everyone's different with their business. Some people are in there, if they're using QuickBooks, they're in their QuickBooks daily. Some people with doing billing and stuff like that. And other people barely touch it or don't touch it at all. They might outsource and have a hired bookkeeper or a really like an in-house CFO or whatever. Some people do it quarterly with somebody else if they've got a business coach. So this is not really like a yes or no.
Or right or wrong.
One answer is correct. Yeah, right or wrong. But it's we're trying to get a pulse on what people do. It's been interesting running those surveys just to see how people operate and what their responses are.
So our results are 14% do it weekly, 14% do it monthly. We have about 43% of you do it quarterly, which is great. And then 29% of you do it annually. So just good numbers. Data.
Pretty good.
Data. I'll stop.
Do you have any nevers?
No nevers and no dailies. I think there's a daily, and I don't think he's on the. I don't think he joined this webinar because I know someone that does a daily. That's one of our clients that signed up for this. I don't think he's on it though right now.
Yeah. I know who you're talking about.
Yeah. So Jake, you want to do this?
Yeah. So how to forecast. So I think some people get intimidated by either some of the wording or just this process, but it's really, to me, it's not super complicated. It is, but it isn't at the same time. And it's just a process to follow, but you have to have some things in place to actually do it and start the process. So first thing you want to do is review your information from the past, whether it's 6 months worth of data, a year's worth of data, or if you're doing a rolling average month over month, year over year, whatever it is. So having a good accounting structure, a good base in place before you can even forecast is a must. So if you don't have access to some kind of report to pull an income statement to show your income and expenses, or a balance sheet, your cash flow, those three main things you need. And if you don't have those are, you can generate those. And if you are uncomfortable doing it yourself, you can hire somebody. But it's worth every dollar to me, I think. So from there, what we've been doing is trying to pull in outside data to compare. So we're doing that personally. We just joined HASBA, which is a national accounting group, and we'll be comparing literally everything that we do with the other members, from marketing to sales processes, sales, revenue data, everything, compensation for owners, compensation for staff, how we're paying out commissions, bonuses, literally everything. So it's good to have a barometer on how well you're doing compared to others. Even if you're not competitive in any way with your business, that's not really the point. It's really to see what other people are doing, what they're doing well, seeing what you're doing, and then IDing whatever your issues are and what your successes are. And then from there, once you have those two things sort of lined up, from there, you really want to be able to ID what your issues are in your businesses, which is going to be a few slides later. And then being able to bring in, if you've got a team, not everybody does, but if you have a group, or either a leadership team, a sales team, a management
advisor,
or advisor, whoever it is, coming together, reviewing all this information and creating some kind of action plan around the performance of the business to date. So if you've got, we're talking about a lot of financial stuff, but like we've been dealing with a lot of internal processes and stuff like that, trying to clean those up.
Even employee like satisfaction,
right?
Something like that. Employee turnover, things like that.
So all of that stuff. So, and then from there, once you have all that stuff ID'd, then you can start to forecast and plan and figure out, okay, it's 2022. We have these 6 things we have to do. If we want to have a successful year, what does that look like? And what do we have to do to get there? What are the drivers to get us to that? So that's sort of the process that we've come up with. There's a million different ways to do this. There's no right or wrong way either. You can do this with a piece of paper and a pencil. It really doesn't matter. You don't have to get super technical with buying software and all that stuff if you don't have the cash, or you're just not inclined to do that. That's not the point. It's just going through the process and putting things somewhere so that you can follow up with a plan.
And then also forecasting ties into those goals that we talked about in December's webinar. So you take the forecast and then you create goals from that forecast. So if your forecast is anticipated, revenue is going to be, go up by 10%, which might be normal in your industry. Maybe you want to go up by 20%. So then you anticipate the 10% growth based on prior year data, but then you want to do additional 10%. So you're going to set your goals each quarter to tie in with that, to actually increase it by 20 versus the 10.
Yeah.
That makes sense?
Definitely, you want to have attainable goals. You don't want to be setting like if you're grossing $1 million, you don't want to say, all right, let's gross 20 next year, unless you've got prospects and leads coming in the door that can project that out to actually happen. But
another non-financial, well, maybe sort of financial, is maybe you're forecasting that growth and you're going to need another employee. So that's part of your goal and the forecasting. So you need to set aside money, maybe you need to do some other stuff, but this is how the forecasting and the goals tie in. Use the forecasting data to help you set the goals, right?
Exactly.
Okay. So the measuring of your performance, this is where we get into the data. This is the key part to get the data to do forecasting. So what are the critical elements for this is key performance indicators. We're going to talk a lot about KPIs, key performance indicators. We started implementing these in September of 2020 in our firm, and now we pretty much live and breathe by KPIs. We also, if you were part of our webinar in December, know that we have a rhythm, a meeting rhythm that we meet weekly, monthly, quarterly, annually. And if you set this stuff, it's just like New Year's resolutions. If you just set it and just say, yeah, that's what I want to do, but you don't actually do anything, you don't have an action plan, it's not going to happen. So establishing a rhythm. And then once you have that rhythm going and you're getting results and you're getting that data, you want to take action on the results.
Right. Yeah,
so we want to explain.
It's habits, changing habits. Gonna have.
We
some
want to
change
explain what a key performance indicator is, because it can be kind of confusing. So KPIs gauge a company's output against a set of targets, objectives, or industry peers. We talk about the benchmarking and things like that. So KPIs can be financial, they can be customer focused, and I'm going to give some examples in the next slide, what we do, and then some other suggestions. They can be process focused or project management focused, operations focused. That's what I mean by that. And then generally speaking, you track them through a software or reporting tool. We actually use, we have a reporting tool that we use the KPI data in with other data that we use that Jake's going to show you. But we actually put the scorecard, we call it scorecard with our KPIs in it for each employee and then our firm. They all tie together in Excel. So it's really not crazy, but I'll give you examples. These are just, they can be confusing, but they're almost like common sense. When I first heard of KPI, I was like, what can we use for KPI? Like, what can they be? And they're honestly, they're pretty basic in your firm. They're what numbers you'd want to see on a regular basis to check on the pulse of your business.
Right. These will be they'll be different for every business, every industry. They're going to be tweaked a little bit.
A little bit, yeah.
There's so many different KPIs. You can really customize and create your own too. It's not like you have to use this set that we're going to go over. This is just some of the things that we've been using and seeing, but there's so many different types of KPIs you can use. Like Aaron was saying, you just want to kind of ID. This goes back to reviewing your current situation to see what your issues are too, because if you don't have any KPIs, you can set them based off of what, off of what your issues are or what your successes are too. If you want to try, like, I forget who I was talking to. I was talking to one of our newer clients about one of the questions we had in that survey, and he brought up a lot of cool stuff related to marketing, leads, and sales, which I hadn't heard from anybody else, and I was surprised to hear from him because he's brand new. So it was good to hear some of the sales related stuff from him, because I was expecting to hear that from some of our other clients, but didn't. So it's all custom, but you just have to identify them and then track them and then get into a rhythm.
And sometimes having someone from the outside, so what helped us, we actually brought in someone outside who's our coach who helped us establish these KPIs. Sometimes you're too in it, like you're too involved in your business where you like, I can't think of anything. Like, so this person helped them, like, oh, now it's so much easier for us to come up with these KPIs and these. So we have like what they're called KRAs for our staff, key result areas, which is the same thing basically. So now we can come up with our staff ones so much easier because they tie in with our main company ones. But if you have any questions, you can obviously reach out to us. But just to give you some examples, these examples here are directly from our company scorecard. So we have percent of revenue change compared to the prior year. Obviously, we have a target of it going up by a certain percentage. Monthly recurring revenue gained or lost. And you do have targets. So you want to set certain targets. If we want our revenue to go up by 20%, our target's there. We want to see, year to date compared to prior year, it's going to be progressing up, hopefully. Monthly recurring revenue, gained or lost. We have number of sales in the number of dollar sales in the sales pipeline. We also have things like percent of payroll compared to gross revenue. That's non-owner. That's actually one of the most important numbers as a business owner you want to look at. If this is one I would suggest to be on anybody's KPI is you have to, and this where the industry standards come in too, the benchmarking, you want to know how much money you're spending on your employees compared to the revenue that you're pulling in. And then something like average hourly rate billed. This is another thing that we do. So other suggestions. Yep. Sorry.
Oh, sorry to cut you off. Like for us, we have a lot of landscaping clients, right? So we can, I can usually tell within 2 minutes whether or not a client is profitable or not based off of their gross sales and their payroll percentage. Because if their payroll percentage is completely out of whack, we know they're not making money, and that there's efficiency issues across the board with a bunch of other stuff that's not even tied to payroll. So just those two numbers in a lot of different industries will tell most of the story a lot of the time.
Yeah. Other suggestions which are good are average revenue per customer or profit per job, which is pretty common if you're in the construction industry. For customers, we have things like client complaints, number of client outreach videos. It's all of our staff has to do videos when they do communication, and they have to keep track of it. Client satisfaction. So if there are surveys that go out, client retention. So that could also be like customer turnover. Other things for other people could be repeat customers. So let's say you're a painter and you did a bathroom for a customer. Did they hire you back to do their exterior or something like that? Customer referrals is obviously huge. Processes. This is also things like operations, just different ways of saying it. So number of late, basically all of our work is run by project. So payroll is a project, bookkeeping is a project. So number of late projects, staff productivity percentage of production staff. So they need to hit a certain percentage for productivity. New client onboarding under 45 days. That is definitely a process thing because there's a whole process that goes into it, but it's part of our internal processes. Other suggestions is number of hours per job per employee. So if you're doing similar jobs for for different customers, you could say get an average of that. Days to it takes to get an estimate out. I think this is huge right now. I know we've had work down here and it was almost impossible to get estimates out. So that's a big thing. Employees. This is one that you might be like, well, why do I need to track my employees? I'm sure you all are aware that the job market, the great resignation, as we're calling it right now, is kind of ridiculous. It's insane. So we have worked tirelessly with our employees to try to get their satisfaction up, their engagement up. We have a whole thing on that. We'd be happy to do a webinar on. We have some really fantastic ideas we've taken from many other businesses that are much better than ours. That have worked really well. So tracking things with your employees, we think is critical because if you don't have happy, engaged employees, the rest of this is like a moot point in a way.
Yeah, they're the engine for us anyway. They keep everything running. So they're the most important piece of what we do.
Yeah. So you can see there. We do like a weekly staff engagement satisfaction survey that goes out every week, things like that. Continuing education hours per week. Then you can see customer service survey scores. So if we send out customer service, survey score for that particular staff, we want to see that's a good idea to go up. Employee turnover rate, which is huge in some of the industries for people that are on here right now. And then for us, particularly, I'm sure this is also in other industries, number of days it takes to fully onboard or train an employee. We don't actually track that, but we're starting to work towards that because then it can tell us when we hire someone how long I can expect for that person to be fully in their position.
Right.
So we're going to show you some more stuff. There's also the benchmarking. Oh, I'm sorry. Wait, one more. 1 second. So this is another question. Are you able to regularly compare your business financial performance benchmarks to others in your industry? If you guys don't mind answering. All right, almost done. Oh, one person did answer yes. I'd love to chat with you about how you're doing that, to be honest. All right. Great.
Yeah, there's
So
some industries, there's like a lot more access to
data.
benchmarking data to compare. Like real estate agents have, I think, I don't know if it's some of their memberships or it's the word slipping my mind right now.
Well, memberships
Some,
can help if you're in
yeah,
industry
like
membership. Yeah.
it will come with some of this benchmarking data to compare so they can see it. So I was talking to one of our clients that they're in real estate, and they're like, oh yeah, we have like a ton of access to all of that type of data. So it's like, oh, that's really cool. That's awesome. And it seems like they use it. So
Well,
depending on the
so
industry, some other industries that people are very guarded, like attorneys. I find it hard to believe that they're sharing a ton of data just from talking to a few of them. But we've always been more about collaborating versus competition. So
yeah. And so all of you but one said no, that you're not. So it'd be awesome to change that and help you out. Okay. So benchmarking comparisons. This is an actual screenshot right here of a client that we have in one of our reporting tools. So like Jake explained earlier, why is it important to compare yourself in the industry? Not just to be like, I'm beating them. It's maybe you don't realize your payroll is super high or your cost of goods is way too high. Or, I mean, you're in different regions too. You can, so it just depends, but it also helps you make little better decisions, because if your wages is way too high compared to the industry, you've got to take a good look at what you're doing internally regarding processes and efficiencies, like Jake said. Maybe your pay or something like that. But this is an actual screenshot from a report that we help a client with. As you can see, he's in the construction industry. He's a roofer, and he's doing very well, which is great. But we do have some clients that a lot of them are in the red, unfortunately, but we're helping them move up. But it's ironic he doesn't take high enough wages compared to the industry. But as you can see, he's compared to the industry.
We're changing that to share.
He's taking his gross profit is 4.25% higher than the average. His wages are 1% a little bit more than the average. He doesn't have rent, so that's a moot point. But just to give you an idea, just something like this to show you how you compare, and this is compared to other industries in his gross revenue range. So it's very applicable to him. It's not just like looking at all construction industries or roofing industries in the whole country. It's specific to his size, his company size. So he is able to actually make decisions based on this data right here. But yeah, do you have anything more to add?
Yeah, and we've seen, like, even with us, since we joined PASBA, a lot of the other firms are not. They're really in the Midwest or down south, and rates of pay are like night and day compared to Massachusetts. Because so people are like, jaws will drop when they hear how much we have to pay people, but we don't mind. Obviously, we've always kind of compensated pretty well, or at least try to. But that definitely, it's good to get an idea of what other people are doing, especially if you can get local regional data, and then just national, or even like if you're doing a 6-state, something that's close, just to get an idea. But it's super important to at least know what's what with some of that stuff.
Yeah. So this is another piece of data that you get from information. So this is another screenshot. You can see I blacked out the owner's name. It's just the top 5 categories. This is something you want to be looking at too, is what are your top 5 expenses? Obviously, he's a roofer. He's got cost of goods expenses and costs. So it's a good, which you could also compare to industry data. But this is just another thing you want to look at. 70% of his costs are variable cost of goods, which means that he's got room to reduce expenses.
Right.
So now that he sees that, okay, 70% of my top 5 are variable, meaning I can reduce something if I need to, if he wasn't matching up with the industry data. So this is just another thing that we like to look at, is top 5 expense categories, which helps you measure your information. I'm not going to stick on this too long, but so once you have all this information, what you want to do is establish a rhythm. So you don't get this data. You have to constantly be gathering this data. And it is kind of a pain initially, but once you get your rhythm going, I can say that personally, because some of my numbers that we set up in September of 2020 were just filled out like a month and a half ago, maybe even last month. So, so it does take time, and don't beat yourself up if you do start this, but every week you want to meet. I'm sorry, I'm going to mute Jake because a lot of feedback. Anyways, so every week we go in, we review, we update whatever KPIs we can that week. So it's the employee engagement survey, it's certain things, new sales in the pipeline, things like that. We meet with the leadership, and then if there's anything immediate to concerning that to discuss, like maybe our staff engagement survey is way down. Well, why is it way down? Let's address that. So we can make decisions. Monthly, we have monthly KPIs. So obviously we have year-to-date revenue compared to prior year. That's on a month-to-month basis, things like that. So what does this tell us? And then we start seeing trends that are happening throughout the year compared to prior year. And this also helps us do quarterly. So do we review, and do we need to review any KPIs? We need to update them, remove them, tweak them, change our targets maybe, because we're not, it's really not helpful to us. This data is not helpful. It's not helping us make decisions. And then we're using this data to help plan and forecast in the future, set goals into the next quarter. And every year, we meet over this, we go over the 12 shots. So we just finished up 2021. We have all of our numbers in there for 2021. And it was fun to see because we did grow a little bit, which is great. Not as much as we wanted to. Unfortunately, COVID is still affecting us in our business, but we're growing, and the numbers are going up, even just staff productivity. So those numbers, for example, that really helped us because we realized there's inefficiencies in training and things like that, training gaps. So what trends would you like to see? Now you make your goals and you set your plan. So what do you want to see in the next 12 months? What kind of goals do you want to set? So that's how you start planning out the next 12 months based on historical data and what you anticipate for the future. Jake, I have you muted for a minute because you're doing a lot of feedback. It must be the internet. So establishing that rhythm is key. And we do it neurotically ever since September of 2020, every week, every month, every quarter, and every year. It happens, and it's the best thing we've ever done. So Jake is going to show you what you do with all that information and what it can result in a second once he's back on. But one last question. This is launching into it. Do you have anybody in your business that's helping you do this? Okay, sorry, we have a little IT issues, I think, going on. So I think he's getting back on, but so it is, like I've said before, you almost all of you said no, you don't have someone helping. I know we all hear on like the trendy podcasts and stuff like that, hire a coach. I actually hate the word coach, advisor, whatever. I did the same thing. I used to roll my eyes at it. I thought it was silly. Having someone, though, when we did finally do it, come in with this outside view and help us was literally the best thing we ever did. I know I said this in December, but it was worth every penny. Our ROI on having someone actually do this stuff with us, hold us accountable, was the best investment we've ever made in our business. And I think every business should do this. Okay, I'm sorry. Jake, why don't you just come here? Sorry, his computer's restarting. So Mike just asked me how much did it cost. It depends, because ours is it's for specifically for an accounting firm. If you wanted to, we also offer these services. So if you ever wanted to do a consult, you could just connect with us and we can start that conversation. It was not inexpensive. It was costly, but like I said, the amount of money that we spent on it, well, okay, for us, it was $60,000 a year.
What your goals are or what your issues are with your business and set them up here with targets. So what we can do is limit the number here. Obviously, we wouldn't want 22 KPIs, which is this number. So most of our clients are worried about profitability. They're either in the process of growing or thinking about growth, or they've got some internal issues that they're trying to fix to make more money, which is pretty normal. There's other KPIs with liquidity, with different things, with asset turnover. You're out buying. This would be more for people that are, if you've got a ton of machinery or trucks on the road, things like that, where you're spending a ton of money that you want to track and see how well things are, your investment in those assets is working out, to track that. We do have clients with cash flow issues. So cash on hand is obviously a big one. Cash flow numbers, there's different reports for cash flow. But what we do is set a target for either the month or the year and then track that on a regular basis. So for this example, this is it's real data, but it's these KPIs are not updated yet because we have a first call of this client this month. So he's, just for the example, he's got 581, 811 in cash on hand. The target was 500, so he's on target. If the target was 600, he'd have obviously it would be a red X, meaning that it's off target. So it's an easy visual way to see, based off of your KPIs that you're pulling, whether or not things are in line and on track. That's basically all this would be. So it's just pulling, we were just talking about the benchmarking data. So what I'm probably going to do is start there, but it's always good for us on our end to review with the client what their goals are and what they want to achieve, and then to set the KPIs from either benchmarking data or a combination of benchmarking data and just projections based off of what the client has going on. So for this client, his revenue target for 2022 is 6 million plus. He's had a tremendous amount of growth over the last 3 years since he's joined us. We can't really take credit for all that growth, but he's had a ton of growth. He has a huge sales engine. His sales process is really queued up and it's humming. He's doing everything perfectly with sales. He's trying to get him to be a coach for his industry, but I don't think he's really interested in that. But he's got a $6 million growth number, so we'll add that in. And he likes to review. We were talking about some of the data for KPIs earlier. He likes to review the length of time on a job, so the turnover per job. So if he's just renovating a roof, if it's a week or less, he's tracking that in an outside software. So we have the capability of pulling in non-financial data and outside info that is not coming from QuickBooks. So all the financial data that we'll go through with some of this demo stuff is straight out of QuickBooks for the most part, but we're able to pull in benchmarking data, which I'll show you some of the reports that we have access to just across the country, and then broken down locally. So that's sort of where we start. We start with that benchmarking data that we can pull, a review with the client to see what their issues are, what they want to set in track for KPIs, because we're not going to force somebody to really use KPIs that they don't really think are useful or are needed. So this is really these two reports would be what we would use. So these are the target numbers which we would set with the client. I'd have to move that. So we can update these to be whatever we think they should be for the current year or current month, and you can tweak them on a regular basis and then go from there. So this is your trend line. just to see versus the target, whether we're on or off track. Some of this stuff, probably like these should be all queued up together into one number. But the importance is either critical, medium, high, or low. And we can actually just delete a lot of these really. We'd get that number down to like 6 to 8 KPIs to track versus 27, that's just way too many, but that's just pulling in all of them. So this would be the profitability section up here, activity ratio, which I don't really see a need for with most of the clients that we have. What we've really been focusing on is cash flow, growth, and profitability. So those are the 3 just for the KPI. So that's like a super quick breakdown of how we track that stuff. You have to go ahead. What?
I was just saying, can you show the goals? I love it.
Oh yeah, yeah. So for him, we've got different, these are just straight cookie cutter, not custom options to use for this what they call a goal seek. So this is what we like to do. This is really a planning session that we would run through with a client. So this is something from really like, it's going to change for us personally at Straight Line next year for 2022. We're going to probably do this quarterly instead of really from October to December, because we're condensing. It's honestly, it's been too much work to condense in such a small window of time. So we have basically like 8 weeks to get through every client that we have to review and plan. And it's really more of like a tax planning session to see if things are in line with what the owner has year to date. I don't know if you want to throw just a quick question out to everybody just to see how they file, if they know if they have either an S Corp, C Corp, partnership, or Schedule C. Because depending on what your entity status is, obviously your planning is going to be a little bit different depending on the type of filing that you have set up for your business. So what we try to do is run through scenarios from October through December based off year-to-date information, whatever their net income looks like, to see what they need to do for year end to reduce their taxable income and save money on tax. Other things that we do during that time is figure out, okay, I want to, like for Brian, for this situation, he's continuing to grow. I want to increase his some of these profitability ratios. So gross profit margin would be net his variable costs or cost of goods sold. So what we can do, if we want to raise it just this like 4%, let's say he can increase his price by 4%. Now we're halfway there to get to this total. If maybe we can just reduce some of his variable costs, now we're almost there. So by just doing these little minor tweaks, we're able to show visually one action plan that can be set up to hit this goal. So if somebody wants to, it could be 15, it could be, let's say it's 55. Same situation. We figure out what these numbers end up being for the change based off of whether it's price. Can we adjust price by that much? That's a pretty good increase, 15%. Is that possible? Can he get away with that? Can he do it? Is he going to get pushed back? Maybe not. Maybe he can only do 12 or 13 or whatever it is. And maybe he can only do this. So we'd have to come up with some other options, some other ways to either generate more money or save some cash and to figure out and get to this difference. So this is cool. It's something that we've never really been able to show or visually show to a client because we don't have really like a ton of tangible things that we can give to somebody besides some sort of financial report or a tax return, or really those are probably, is there any other options for us? I don't even know if there is. We don't really have too many options. So this is just for us, another option to show somebody something tangible that they can look at, review, and see.
This also
and then
helps
from
them.
here,
It's also, it's not just showing, it's also, it literally is live updates based on your prior financial data.
Yeah.
So
Yeah, exactly.
I know he said it during tax season, but this is something that would be done, I think it was
On a regular basis throughout the year.
Yeah,
So
I think it was kind of confusing in the beginning because we're all flustered from the tech, but this isn't something that is just done at tax season. It's done, this client specifically is on a quarterly basis. He reviews all this stuff. He doesn't have the non-financial KPIs in here, but we would also, let's say the variable, you know, they want to do employee turnover, we can include that. It's certain things that, this is just how you can do the forecasting based on your historical data. But the only way for that to get in here to do that is to have the data available, up to date and accurate.
Yeah, that's the key, because there's literally no other way to do it. Otherwise you're guessing. And sometimes you can be on or off with those estimates. So
and there's
that's obviously
scenarios.
key.
There's also scenarios we're able to do too as part of forecasting. Let's say you want to buy a truck or purchase another business. We can run those numbers as well. But that's something that other programs available have. There's like you can probably Google certain programs. A lot, like you can do this by hand and to some capacity, but there's so much tech out there now. There's like, why? You know what I mean? And it's fun to play with the numbers, and once you get into it, to see what your numbers can actually do for you. Yeah. So we apologize for that IT issue. That was obviously not planned, but that's what happens when you work from home when your internet's spotty. But that was just a brief demo on it. I think we had a little bit longer plan, but we didn't want to hold you guys up. And so again, we have another webinar coming up in February. It's going to be about budgeting and forecasting, how to do step-by-step, how to budget, which helps with all of this, obviously. And if you have any things that you want to hear about, someone did one of the last webinars, they want to talk about actually how to manage your time. I thought that was a great idea. We talk about that constantly in our firm, actually. It's a very big topic. But we're really willing to do a webinar on anything. Right now, we are focusing, like I said, on helping businesses be more profitable. But we do appreciate your time, and we are doing these monthly. So just keep checking your email. We love doing them. This is what's fun for us. And if you have any questions and you want help, if you want to reach out, if this is something that you'd be interested to do with us, feel free. We do typically lump this in. We don't have to do this forecasting and goal setting and do your accounting and bookkeeping. It just, to all of our clients, that's what we do their bookkeeping and tax work, and then this is added on. But we can do this if you have another bookkeeper, another accountant. We are able to work with your QuickBooks file or whatever file you have and do this too. So it is a service outside of the accounting and tax. But these are the places you can follow us, call us, email us. We're here. And I don't think we have any questions. Thanks, Mike. We appreciate it. And again, we do apologize for the IT issues. Oh, Deborah, thanks. And it's almost 12. So if anybody has any questions, feel free to raise your hand. If not, we're at noon almost, so we can let you guys go. And we will send this again after in the next day or so. Okay, great. Well, happy Thursday. Have a fantastic day, guys.